Well, good morning. We're here at SuperReturn in Hong Kong 2013. I had the pleasure of talking with Derek Sulger from Lunar Capital. Derek, good morning.
Thank you. Good morning.
Now, Derek, we had a very interesting session from David Mann from Standard Chartered talking about the global macroeconomic outlook, but in particular, obviously looking at China, and a very positive and relaxed view he had that despite some people's concerns about sort of the growth and the prospects, he's very bullish about it. Sees no crisis. Now, you're a private equity investor. You're not an economist, but obviously you have a view on the background, the economic background with which you invest. What's your perspective?
Generally, I've been in China for 15 years, and my general view about macroeconomics is that quite often people are right, but most of the time everybody's wrong. So I tend to try to tune out the macro picture.
Okay.
That having been said, people like David make some very good points, and it complements what I tend to focus on, which is the operating data and what I see on the ground with our businesses.
So what you see at the coalface, the actual company.
Exactly.
Right,
so I think
right.
it's much harder for me to give a comprehensive answer about the big macroeconomic challenges in China.
Let's focus on what you're seeing then.
Yeah. So at the company level, what we've seen is a year where it has been tough for retailers. It has been tough for consumer related businesses, which is what we focus on. But two things of note. The challenge has more been a decline in growth of sales from 20% odd per annum on average to 12% per odd on average. So most people would say either of those numbers are good. The challenge is that you have managers who are now having to adjust toward more normalized high rates of sales rather than these hyper rates of sales that they enjoyed in the past. The second thing is costs are rising everywhere. So we always tell managers that in the old days, all they had to focus on is growth. Now they have to focus on margins. And I think that's a shift in mindset that has caused some people to feel quite distressed and to some extent contributed to the negativity in the atmosphere. But when you stand back and look at it, these are arguably good problems to have.
Well, the problems of success, aren't they? The
Exactly.
costs are bound to rise if the economy.
Exactly. And they're not, I don't see them as systemic. I certainly don't see anything in our portfolio that would suggest systemic risk. In fact, just the opposite. In our consumer businesses, we still see very healthy growth. We see margin pressure, but margin pressure that's controllable. We see very low levels of debt, despite the ballooning debt that people talk about in China. Private companies in particular still have very controllable levels of debt. Lastly, we do have businesses that look a bit more upstream, and we see prices of everything from pork to agricultural products rising, which I think correlates to growth.
Right. So Derek, that's a very solid macroeconomic background. Moving into actually the investments you make, one of the concerns expressed yesterday in some of the sessions was that many of the investments made, particularly in China, are not control investments, that they're minority non-control stakes. What do you do at Lunar Capital? What's your approach there?
I'm a bit unusual in that when I came to China about 15 years ago, I started a company, and along with many of the partners who I started that business with, we now that's the core team of Lunar Capital, of our GP. We tend to take a very operational approach, and I would say almost an industry insider's approach to our investments. So we like to buy majority controlling stakes in China. It can be done. You probably have to look more toward the middle market, so it's much harder to do if you're a larger firm with a large amount of capital to put to work. But if you're a firm that can afford to make middle market investments in middle market companies, there is an ability to buy companies. We do that by trying to stay very focused on things we know. So if we know food and beverage, we'll buy beverage businesses, beverage brands, snack food companies, snack food related businesses. So we tend to sort of stay within the wheelhouse of where we have expertise and frankly where we have managers who can run businesses. I personally believe that people can make money in any sector in China. I think that there's good opportunity in venture. There's good opportunity to be a growth, more of a passive minority growth capital type of investor. I personally prefer control investments. It's harder work, they're harder to find, And I think you have to have more of a specialized skill set. So you have to be willing to be more of a boutique. But it addresses a lot of the concerns that we've all faced in China. What you end up with, despite the harder work, is stronger governance, management you can trust. It tends to pull you toward businesses that probably are more sustainable on a standalone basis, rather than overly dependent on a handful of founders or managers.
Absolutely, and arguably from what you're saying, Derek, it sounds like a managed sort of risk, a lower risk sort of.
I always say, I think increasingly the statistical data is there to show. I think we all know globally that control generally yields better returns and certainly better risk-adjusted returns. We've seen that in China. We've certainly seen that in our own portfolio. We did have, and we've always had a small handful of minority investments for one reason or another. The return, the distributions on the majority investments has generally been better. The ability to control the exit, particularly when it comes to a trade sale-like situation, is much easier, and it's much more obvious to some extent. And I think when I look at the statistical data available overall for the landscape in China, it's becoming increasingly clear to me in China that the handful of firms that do try to take more control generally outperform, and certainly outperform on a risk-adjusted basis.
Derek, that's excellent. Just to finish off, are there particular industries, particular sectors where you're seeing attractive opportunities at the moment?
I think that in general, China is an attractive opportunity at the moment because public valuations have been dragged down, and because there is this feeling of distress. There's a feeling of distress because the appetite, to some extent, from foreign investors has become more cautious. There's a feeling of distress because there is concern about the degree of bank loans and property, and those pressures definitely transmit to the entrepreneurial community. So entrepreneurs are nervous.
Is it coming through to valuations then?
And it is coming, absolutely, and it's coming, and it's absolutely has come through to valuations. And I think more importantly, scientifically trying to determine how it's come through in valuations is always difficult. But what is absolutely true is that entrepreneurs are far more rational, and they're more willing to look for solutions, and they're more willing to listen to ideas. So if you find a team of entrepreneurs or you find a team of business owners who you can do business with, it's easier to get that business done today on a trusted basis than it was in the past. So overall, I think the climate in that regard for getting deals done is quite exciting.
Derek, it sounds a pretty compelling and very exciting story. Thank you very much.
Thank you.
Thank you.
Thank you.